A very good morning to a very good morning to Mr. Azam and our friends. So today we're going to present about Lehman Brothers US presentation, which is this is our study case based on real case in United States. So actually we are from Beta Group. So today we're going to present about this. So basically this is our main content of our assignment, which is given to us about two months ago. Okay, in our content actually, we do have our introductions of fraud 2.0, fraud in Lehman Brothers. Number three, fraud tingle. Number four, the consequences imposed for the auditor, especially company, management, and shareholder. Number five, conclusion, and we do also have wisdom words. Next slide. So basically, what do you know about accounting fraud? Actually, accounting fraud is a term that we always that we always use, especially in generally. It's also known as a term that to be used as when we want to describe a company entity employee, especially when employees steal, misappropriates, and ensemble money from other asset. These types of fraud can be perpetrated by anyone in other position, especially from top management. Okay, it could be clerk, accounting, and chief financial officer. Actually, fraud can be motivated by many factors, such as personal arrangement, covering for faults, and covering for a loved one. The intriguing things about accounting fraud is that usually starts with a minor finding and ends with a large expose of fraud. That's generally what's about accounting fraud. So next slide. Okay, these are the types of accounting fraud. As you can see, fraud, payments, payroll scam, financial statement fraud, invoice fraud, account payable fraud, account receivable fraud, and tax frauds. There are six types of accounting fraud that we were gonna let you know about this. Okay, first of all, payroll scam. Payroll scam is usually happen in HR department, which is HR official includes in maybe include in frauds. Okay, this is accounting fraud, which is payroll personnel established a dummy, especially for a worker who paid on a regular basis. Accounting fraud is very widespread in huge government-owned business. Okay, second, invoice fraud. What do you know about invoice fraud? Actually, invoice fraud is employee duplicate. They duplicate their invoice and occasionally issuing in the names of real customer or service provider that is known. Okay, number three, account account payable fraud. Actually, account payable fraud is invoice fraud that a subset of accounts payable. The difference that in accounting fraud, the perpetrator works with a pony firm or they create of fictitious corporations that never exist, then submit and they claim for the payment it's really because it's not too difficult to pull off than other business because it's really simple to make this accounting fraud. Okay, the next accounting fraud, we do have our financial statement fraud. Actually, financial statement fraud is a high level of fraud actually. It's mostly prepared by a top management staff, which is that really have a more power than the lower staff. And then the main motive behind these kinds of fraud actually is to present a failing company as being profitable as this will greatly influence the peaks that manager will receive at the end of the day. Number three, we do have tax fraud. Actually, tax fraud is regarding our taxation in Malaysia. It's kind of sort of accounting, which is a company director faces financial data to in order to conceal their earning. Actually, the ultimate goal is they want to avoid having too many tax during the year. That's why they do taxation fraud. Okay, number three, account receivable. It's quite similar with payable fraud, but the thing is, the difference is just use they just use account receivable. This is the main important types of accounting fraud happen in world. Okay, next slide. Okay, what do you know about the terms of tone at the top? Basically, basically the terms of the top is used in auditing to describe the leadership of company management and the board of director, as well as their dedication to being honest and ethical. A company culture, environment, and corporate principles are established by the tones of the thought. As you can see, we do have an employee, senior management, and board of director. This is what we call organization structure. Next. Okay, understanding about the tone of the top. This is our organization structure, which is come from BOD, senior management team, and employee. Okay, actually the top, the actually the tone the tone set at the top established that the board of director and the management team should be compliance and ethics rather than mere pay lips respect to them. It states that those at the top of the company should be honest, yes, of course, and then they must have integrity and promote an ethical business culture. As the term implies, the tones of the thought begins at the top and cascade down to the middle, as you can see, from BOD, senior management, and employee. Finally, with the bottom line, this is what we call bottom line. They're going down. Okay, a corporation with a negative tone is more likely to engage in unethical behavior such as fraud. They will participate in fraud conduct and fail to maintain internal control. Okay, next slide. Okay, this is the way how we want to improve tone at the top. Number one, you can communicate. Number one, MOD or management should clearly communicate and promote ethics and value. For example, honest value. They have to have a written code of conduct, which is whole frequent staff meeting, and engage of informal conversation that communicate and promote the company ethics and value. In addition, management and the board of directors should display their commitment to abiding by the ethics and rule. For example, after relying on reports for the day finding, Lehman was for example, Lehman was already in a vulnerable position in in the early summer of 2008. The company attempted to boost market confidence by raising fund and then um, raising funds through an equity offering. When Lehman Brothers announced a third quarter loss of roughly 4 billion in September, the move was really encouraging. In addition, it's disclosed 5 to 5.6 billion write down in hazard assets. In this situation, before facing the hard time, the board of directors should clearly communicate and with the employee regarding the company codes of company conduct of company. Number two, okay, board of director of management can be always encouraged to report misconduct. Okay, employees should be able to safely report misconduct that occur in the company. Safely actually is referring to a reference to being able to report misconduct without any fear, feeling of uh, facing repercussion from other. For example, having a corporate reporting hotline at guarantees anonymity, providing a safe outlet for employee and report for the misconduct or unethical behavior that can help to regulate under cerebral behavior that may occur. So number three, uh, ways to improve tones at the top. We can always be management or BOD can reward can give a reward integrity, which is it's referring to management action. So they reward a person who show integrity and uphold the value set by the company. Employee are thus able to recognize that they're being acknowledged by those around them for the good behavior for the good behavior that they display in the company actually. It's a good alternative to encourage tone at the top actually. Next presentation. Okay, I'll pass to the next presenter. Alright.
Okay, so Assalamualaikum warahmatullahi wabarakatuh. So my name is Nurin Nadiah binti Hasnawi. So I'll be present about fraud in Lehman Brothers case. Okay. As you know, Lehman Brothers is an insolvency and the greatest financial crisis since the Great Depression. Lehman Brothers was founded in 1850 as a tiny cotton trading company by a German immigrant and his two brothers, and it has since grown to become one of Wall Street's top investment banks. And then its reputation, on the other hand, considerably outweighed what was hidden beneath a cloak of falsified quarterly and yearly reports. So the bankruptcy of Lehman Brothers was the most significant in American history. It sunk a lot of money into high-risk mortgages just as home prices began to plummet. Lehman lied in a variety of ways. According to the examiner's finding, Lehman utilized balance sheet manipulation 3 times to disguise debt of 38.6 billion, 49.1 billion, and 50.4 billion in late 2007 and the first half of 2008. Next slide. Okay, next. How was the fraud perpetrated and concealed? Okay, first thing first. Lehman utilized an accounting trick to make it appear as if it had offloaded problematic assets and lowered its balance sheet. So Lehman would raise funds in a typical repo transaction by selling assets with the commitment to acquire them back later. It is a frequent short-term funding option. The assets stayed on Lehman's balance sheet because it was a finance rather than a sale. So Lehman Brothers took over 50 billion in loans by classifying them as sales. And then companies have traditionally employed repurchase agreements, which have also known as repo, to handle their short-term cash needs. But in the case of Lehman, this transaction took on an unexpected twist that was aimed to make Lehman's balance sheet appear better than it was. In traditional repurchase transaction, an investment banking business provides highly liquid securities to a counterparty in exchange for cash. So the auditor for this company is Ernst & Young, which they also manipulated the books by using accounting trick repo 105. Okay, next slide. Okay, so basically, repo is a repurchase agreement, which is a short-term secured loan. So the situation is, there is one party sells securities to another party, and then they agree to repurchase it at a higher price. So that is the situation. So, and then the company, the Lehman Brothers, temporarily moved 50 billions of assets at the end of each quarter. And then, so that it will make them appear to be far less dependent on borrowed money than they actually were. So, repurchase agreement or repos are a common practice on Wall Street, and they refer to short-term loans that can be quite useful. So, I pass to the next presenter. Sorry, that's my turn. So, the next part is the whistleblower. So, who is the whistleblower of this company? So, the whistleblower of this company is Matthew Lee. So Matthew Lee, who was employed as an accounting professional at the business in 2007 when he spotted some frightening figure crunching and raised the alarm. So he was quickly sacked, and he feels he has been blacklisted on Wall Street evidence. And then Matthew Lee, also a senior vice president in the finance division, outlined 6 allegations of unethical accounting and asked Ernst and Young to investigate. So he brought up the controversial Repo 105 transaction in conversation with Ernst and Young partner, which artificially boosted Lehman's balance sheet by 50 billion. Okay, so that's all from my part. So I pass to the next presenter.
So, my name is Farah Ayuni Binti Mohamad. So, we talk about the pressure, opportunities, and rationalization. Actually, pressure, opportunity, and rationalization is the component of the fraud triangle. So, the pressure is the perception of a need to defraud. The opportunity is the circumstances that make it possible for fraud to occur. And the last one is rationalization, the fraudster mindset that allows them to perpetrate frauds. Next slide. Pressure. The pressure of Lehman Brothers is Lehman had to reduce its leverage or face certain demise. It is because Lehman adopted a high leverage business model that needed it to raise billions of dollars every day. It has made significant investment in high risk real estate and subprime mortgages. And the last one, in 2008, Lehman was in financial trouble due to its unstable balance sheet and declining profit. Lehman needed to give the impression that it was in better health than it actually was. Next. The opportunity of Lehman Brothers was a major player in the repo market. Other than that, Lehman was a multinational investment bank that started out as a dry goods business before expanding into commodity trading and brokerage services. Lehman also was run as a worldwide corporation with its fundraising activities centralized in the US. Since Lehman have worldwide corporation, Lehman has sold certificate to around 50,000 investors, and the company was the fourth largest investment bank in US. Next. The last one of fraud triangle is rationalization. The rationalization of Lehman Brothers is they wanted to appear like they are not taking on too much debt. Since they borrow a lot of money, so they want to hide behind the pretense of loans disguised as sales. Lehman also feels like what like what they do is correct because they claims that their acts were not illegal. Since Ernst and Young, their auditor, gave them permission to do so. Last but not least, it was necessary for Lehman to do so in order to keep the company alive and preserve its interests. Next presenter.
Thank you, Farah. So I will present right impose the auditor. Firstly, is unqualified opinion. When Ernst and Young Global Limited served as Lehman Brothers independent auditors from 2001 until Lehman filed bankruptcy in 2008. During this period, it reviewed and signed off on Lehman's financial statement in each case, giving the preferred unqualified opinion. And the Lehman bankruptcy examiner asking some question about Lehman's accounting methods and the role that EY played in allowing certain items to go unchallenged and undisclosed in its financial statement. And which enable Lehman shift up to $50 billion from its balance sheet at quarter end and report for and the examiner concluded that Lehman's statements were misleading and that plausible claims existed against EY for negligence and malpractice. Next slide. Next is the consequence company. Lehman Brothers Holding filed a bankruptcy petition in the United States bankruptcy for the Southern District of New York. It was the largest bankruptcy proceeding in U.S. history. The 164 years old largest U.S. investment bank, and its bankruptcy kicked off a global financial crisis. Lehman used a high leverage business model that required it to raise billions of dollars every day to keep the doors open. In 2006, it had invested heavily in high-risk real estate and subprime mortgage. When this market turned south, Lehman could not raise enough cash to stay in business. Since Lehman Brothers was an investment bank, the government could not nationalize it like it did government enterprise. For some reason, not federal regulatory, like the FDIC, could take it instead of Loan Bank of America wanted the government $65 billion to $70 billion in anticipated losses, and Paulson said he doesn't want. He and Federal Reserve of New York President sponsor a weekend retreat with the nation's top banker to find funding for Lehman Brothers. Next slide. The consequences imposed for the management. The factor listed as the primary causes of failure relate to management's inability to deal with situations regarding the approach and logic of reasoning before a panel. liquidity crisis, financial leverage, unsustainable process, repo 105, major credit default swaps, and subprime mortgage crisis, complicated capital structure, failed payloads, and takeover. Financial experts accuse the alteration of the failure of Lehman in their pursuit to compete with commercial banks with high influence position. Lehman merged and acquired many commercial and investment bank. Financial experts um, accuse the alteration of the failure of Lehman. Another important factor that also collapsed the Lehman Brothers was their desire to use dubious mechanism and unacceptable accounting practice, coupled with blatant disregard for proper business governance practice. And some studies have shown that Lehman was always window dressing the financial statement. Next. Last but not least is the consequences imposed for the shareholders and the others party. Under UK law, directors should take account of the interests of the other parties to the extent that they promote the success of their companies for the benefit of their shareholders. They also have a further duty
The conclusion of this case is the use of repo 105 by Lehman Brothers to conceal its risk question about fiduciary legal and ethical obligation to their client and the public. Our findings imply that in using repo 105 transaction, Lehman violated the IMA's Code of Conduct's integrity and credibility requirement. Third, the failure of Lehman Brothers had a global impact. Lehman Brothers collapse has much consequences for the international banking sector and the financial system as a whole. The last one, Lehman as an international business community must ensure the businesses maintain high standard and ethical culture. Next.
Okay, last but not least from our group is use some words from Lehman Brothers fraud case. So it's been 5 years since Lehman went bankrupt. So I would like to provide some unusual advice, and I hope it is wisdom. So the underlying lesson I take from Lehman that a simple move that was applauded by free market type at the time and allowed Lehman to fail. So basically, a simple move can allow someone to fail, and it also can trigger unforeseeable effects. And then another using word is a federal loan to Lehman Brothers would not have kept the company from going bankrupt. So I think that's all from us. So thank you, and thank you for listening. That's all.